It's raining unicorns in India, and the latest to join the unicorn club or startups valued at more than $1 billion is Mensa Brand, a startup which basically acquires private labels that sells on e-commerce platforms such as Amazon or Flipkart, and even the D2C brands as well. Now, to talk more about this, joining me is Ananth Narayanan, the founder and CEO of Mensa Brand. You have seen Ananth in many avatars before. He's the former CEO of Myntra, former co-founder and CEO of pharmacy startup MedLife. Ananth, great to have you with us today, and congratulations on the new fundraise.
Thank you so much, and thanks for having me.
6 months and a unicorn. What drove that funding euphoria at Mensa Brand? Definitely the business model worked well. Talk us about what led to this funding interest, growth demand in the business.
Absolutely. So, look, firstly, let me tell you a little bit about Mensa and what it's trying to do. We are trying to build a global tech-led house of brands. If you look at India over the next 10 years, there will be more and more digital brands, digital-first brands that get created. However, these brands struggle with scale. So, you can create a 20, 30 crore brand. How do you create a 300 crore brand becomes a problem. That's where Mensa comes in. We partner with outstanding founders, and we actually then accelerate the brand growth, right? So we've been very fortunate. In the last 6 months, we've been able to partner with 12 of them already. Those are completed, right? We have brands in fashion, we have brands in beauty, and we have brands in home. And each of these brands, we're actually using a combination of technology, digital marketing, and e-commerce expertise, really growing and scaling, not just in India, Nishant, but also globally, right?
Okay.
So what's very exciting for me is we're taking Indian brands global, and I think that's something that we can make really big over the next 10 years, right? So if you, just to give you a couple of examples, right? We have a brand called Karagiri, which I'm very excited about. It's a premium sari brand, which I think is now growing at 140% year on year. Started by this outstanding founder, Pallavi, who's now partnered with us, and we're now growing and scaling that brand, right? And we're able to sort of grow now at 140%. We've taken it global, right? We have another brand called Villain, which is a fragrance brand that I think is now growing at 250% year on year, right? Because we've again growth hacked our way, found new digital marketing means, introduced new products, all through a technology platform. That's what's exciting about it. Of course, the funding is nice. We have raised money in a Series A. We have a great set of investors that I'm hugely grateful for. This round is being led by Falcon Edge, Navroz and his team. And we also have all our existing investors, Norwest, Axel, all Tiger Global, all participating, as well as, by the way, a new investor now, which is Process, Naspers Ventures, which is also joined at Cap Table. So very exciting. But really, it's not about the capital raise. It's about the business we're building. And I think we're trying to build a global tech-led house of brands. And I think that's what's exciting about this.
And also tell us about the model that you operate. Is it more, in a way, how much stake you acquire in these companies or the private labels that you work with? And also the profitability. How are these brands have also grown in the last 6 months? Because that has also aided in the way investors are valuing your company.
Absolutely. So firstly, by the way, Nishant, they're all brands. They're all emerging brands. They're not labels. Each of them has a very unique identity. So we buy a majority in the brands, usually between 60 and 70%, and then the remaining over a period of time. I think what's interesting, though, is independent of legal ownership. We think of the founders as our partners, and they work with us for at least 5 years and then hopefully beyond, right? And the reason for that is we're building brands. They're very good at sourcing, very good at design. We are probably very good at branding, marketing, and technology, and coming together really helps, right? I think that's one. Second is, if you ask about what's happened over the last 6 months, we're very excited, right? That's why I think the excitement, which is we've been able to build a technology-led operating system for accelerating brands. Most of our brands are growing, around 100% type range year on year, right? And I think which is fantastic. And several of our brands are breaking out. And the reason they're breaking out is, by the way, we're solving core problems, availability, advertising, pricing, product development, etc., through technology, and working jointly with the founder and the founding teams to accelerate the brand. And that's really what's doing it. Last thing I'll tell you, which I'm very proud about, is we're a profitable company. So, I think valuations aside, we're profitable, like I said before, right? So the brands are profitable, and Mensa as a whole is profitable, right? Within the first 6 months of operation, which is quite rare in a startup, right? And I think that's, by the way, an interesting thing, because there's now new models that are emerging, Shant. This is a new industry, right? That's getting created, which is both fast growth and profitable. And I think that's a rare combination, right? And so the capital that we get is used more for growth and for investments rather than and getting new partnerships rather than sort of subsidies and discounting and so on, right? So these brands are growing and growing profitably.
Right. Yeah, you mentioned, you're already profitable. Give us the kind of revenue run rate that you're clocking, overall GMV, the platforms that you have done in the last 6 months.
Yeah. So look, I mean, it's hard to calculate the revenue run rate. I would say, by the way, rather than comment on the exact revenue run rate, because brands are coming in at various points of time as we acquire them. Literally, our growth rate is 2x of is 2x of what the growth rate that it came in at, right? So we've been able to double the growth rate, which we feel very good about, right? I think March next year, when we hopefully talk, I can tell you a little bit about how we've done for the year and the run rate for the year, right? Because I feel we'll be very good. I think we'll grow north of 100% year on year, right, for the entire year as well, right? And like I told you, we've done 12 brands, and most of the brands, the average size of the brands are sort of in the 30 crore range, and we've doubled them.
Right. Give us what you're raising about $135 million in this restaurant, which also makes you a unicorn.
Yes.
What are the areas you're going to invest this money into? What are the key requirements the business needs? Are you investing in brands, investing in expanding the team, tech? Where the money is going?
Absolutely. So look, 135 is the round raise. And I think what we are using it, a majority of it will be used for more brand partnerships, right? So if you're a D2C brand in India, looking to grow and scale, you should come talk to Mensa Brands. Sorry for the plug, but I think come talk to us. That's where most of the money is going to go. In addition to that, we'll also continue to invest in the growth of our own team, the Mensa team. We're investing in areas of technology. We're investing in marketing and growth hacking. We're investing in operations. We're investing in category management. So across areas. So we have 60 people, Nishant, in the team today. And that number over the next 1.5 years will become closer to 200. And this doesn't include the sort of set of people that come along with the brands, which even today is another 200 people in addition to the first 60, right? So I think this is scaling very rapidly, which we're very excited about.
When you rope in brands, how much you invest in each brands to grow them and scale them, both domestic and in international market? You have a target in mind when you get in a company, how much money you're putting in each brand?
Yeah. No, absolutely. I mean, we don't have a target, but what we do is we co-create a plan with each brand on what do they need in order to grow 10x, right? And some of it is money, some of it is capabilities. But the three investments that I typically put into the brands is there's, of course, marketing investments. There's actually product development capability type investments. There's working capital and inventory, right? So the minute you start going global, you have 3-4 months of inventory, right? Because you have to ship it. And so all of those are the kinds of investments that we actually do in each brand. I would say, by the way, Nishant, each brand's investment varies, but we are willing to do as much investment as needed to create a breakout brand, right? So we don't have a target in mind. We basically say, what will it take to get 10x, right? We still want to do it. Remember, we still want to do it profitably. We don't mind investing ahead, but we want to do it profitably, right? But we sit down with the brand owner and come up with a set of initiatives and then invest behind each of those initiatives to grow and scale.
What's the average you're spending in each brand? So far, the 6 brands that you have?
I would say, by the way, between 3 and 5% of revenue. We would invest back in marketing, branding, and growth.
Right. And also, I'm always curious. I mean, the model is fairly simple. You are acquiring private labels, brands, which sells on e-commerce model. Is there so much room to grow and, have, and because the competition has also grown immensely in this space, I think, inspired from all the Thrasio kind of model.
Yeah. So I would say, by the way, firstly, we're not Thrasio and we're not doing labels. We're doing brands. Sorry to keep repeating that. We're doing brands that we're growing and scaling. I would say it's actually all about the execution. Remember, we're not just trying to do revenue and EBITDA. We're trying to make them brands. What is a brand? A brand is something that has pull, that has customer pull instead of push, right? So it's actually quite hard to do. If you think about technology-led brand building, everything from growth hacking, which is how do you grow inside a marketplace. By the way, we have 15% in D2C revenue, 15, right? So there's also direct-to-consumer revenue. I think opening up newer platforms globally is not easy to do, right? And we do that. I think, by the way, in going from 1 channel to 5 channels for a brand, right? So let's say you're very strong on X channel and you go to Y channel. Actually, that's hard to do, right? Because you have a cold start problem. We have a way to solve that, right? And then, by the way, creating viral marketing that doesn't cost much but creates brand value is very hard to do. So all of those things are really the DNA of how we grow, right? I'll give you a simple example. Inventory availability is a simple problem. You just say have more inventory, but it locks up a lot of working capital. So how do you do intelligent tech-led inventory optimization that improves your availability but doesn't hurt your working capital? So it's all, Nishant, about execution. The ideas may seem simple, but the real operating system and DNA you're building is how do you productize it? How do you productize digital brand building, right? And sort of you're able to do this across 12 now and hopefully 40 over the next 2 years, right?
Mhm. Are
That's
you
what
well
we're trying to do.
capitalized? Are you well capitalized?
We're very well capitalized. I mean, across all our rounds and the combination of debt and equity, I think we have a lot of money. By the way, we still have a lot of money in the bank from our previous round. So we haven't spent all of it yet. So I think this
So
is
was it
just
like
more
an
on.
inbound investor interest you saw coming in because of the opportunities?
I think
What
if you
led?
look, our current investors, especially Falcon, I think was very excited because of the acceleration part, right? The brand acceleration is what people get excited about. Of course, you need to figure out the partnerships and the acquisition, but the real magic here is accelerating, right? And that's what we're focused on. And there is traction there, right? And you start to see results there. You start to see the processes that you put in there, the technology that you put in there. That's what is exciting our investors because we're really figuring out how to accelerate brand growth. That's what investors.
Right. And how do you stay ahead of the competition? The market is extremely crowded. I mean, be it they are private label brands.
I don't agree, by the way. No, I don't agree actually. By the way, India is mostly an unbranded market. If you take for a minute a slightly step back discussion, right? Across fashion, beauty, and home, it's a $120 billion market, right? Offline plus online. 80% of that, Nishant, today is unbranded. 80%. So India will create a lot of brands, not a small number of brands. That's number one. So I don't think there are enough people. I think we need more people creating brands, not less, right? Because the Indian consumer wants brands because brands have meaning, right? And you want, as GDP per capita goes up, people want brands, not labels. People want more than functionality, right? So there'll be more and more brands that get created, number one. Second, it's not a winner takes all market. You can have 5 brands, you can have 20 brands, you can have 50 brands. And I think you could build them in a profitable way, right? So we're not burning money. So there is no competition that way, right? We choose to partner with more or partner with less, depending on how much capital you have. Third, we're taking the brands global, which means, by the way, the market size expands dramatically, right? You take the US, you take Europe, you take Middle East, you can start to actually get these brands in all of these markets. So the market size definitely improves, right? And we have from India a unique advantage, which is we have a sourcing advantage across certainly textiles, but also in formulations and so on, right? So our ability to sort of take this to the world is, I think, the most exciting opportunity in my view over the next, I would say, 10 years.
Right. What's your target ahead? How many brands are you looking to acquire by the end of next year?
So I would say, by the way, a little bit of what I've already said earlier also. I think we're looking for about 40 brands that we want to try and get to by December, end of next year. Maybe we'll be ahead, maybe we'll be behind, but that's what we're aiming for. I think also more importantly for me than that, I want to see if of the 40 brands, 7 to 10 brands become breakout brands, which is they're growing dramatically fast. They're becoming household names. They're starting to sell globally. That's really important. That's what we're focused on.
And what conversation you're having with the investors? That'll be my last question. What conversation you're having with the investors that are on board, which are seeing a huge interest among the competition and within the organization itself, where you're seeing the breakout brands, the brands are growing. How are you discussing this with investors? Because there's definitely an excitement and buzz in this space.
Yeah, I would say I don't know about the space, but I think if you talk about us for a minute in Mensa, I think why we are all excited in Mensa as a team and why our investors are excited is the operating system, which is technology-led that we're building, right? That is the core to accelerating the brands. If you take inventory management, you take pricing, you take advertising, you take digital brand building, you take influencer marketing. Each of these, we're building real technology-led products and processes that will allow us to accelerate not 1, not 2, but 40 brands, right? That's the core of the DNA that we're building. I think that's the valuable part about the business.
Right. I think we'll leave it that note. It's great catching you up again, and wishing you luck for what lies ahead for Mensa Brands. Wishing you build interesting brands going ahead. But Ananth,
thank you.
Always pleasure talking to you. Thank you for your time.
Thanks so much, Nishant. Thanks for having me.